Hi, everybody, and boo! It is Friday the 13th. I am here with my good buddy Greg Newton of NakedShortsTypeBed.com. Greg, how are you doing?
I'm doing great, Dave. How are you?
Well, I've had kind of a stressful last few days trying to figure out exactly how I wanted to deal with an alligator of a market, but, it's been a pretty wild week with lots of news and thrills and spills, enough to give everybody a lot of whiplash, for lack of a better word. The rally last Friday, which was kind of strange. And then we had the Geithner speech, for lack of a better word. It wasn't really a plan. Then we had the on and off stimulus package, which seems to be on again. And then we had the rumor, which was leaked in a very timely manner on Thursday, as we were approaching the previous S&P lows around 805, that the Obama administration was going to have some kind of a home owners rescue package in the works, which they confirmed that they're now going to announce on Wednesday. And that has created lots of thrills and spills, but do you have any thoughts of any of that?
Well, obviously, it's been a stressful week, and I'll just mention the Tuesday's performance particularly. A little gratuitous market violence there. A lot of people laid that at Mr. Geithner's door, but I felt strongly that we were setting up a sell the news picture last week, because that run-up on Friday on the unemployment situation made no difference. No matter how stressful your week was, Dave, it could have been worse. Nobody dragged you before Congress and yelled at you for 7 hours.
Well, I did post a few videos. One guy from Massachusetts I thought was very good. He'd never asked a question. He made a speech, but it was a pretty good speech. He ripped them pretty good, but as it turns out, I found out subsequently he voted for all the stuff that he did, so I guess it was a speech for the hometown folks. And then Barney Frank, I don't know what to make of Barney Frank. He was the one making a speech, last year, that Fannie and Freddie were just fine, thank you very much, and don't worry about him, so I don't think he's qualified to be in the position he is. And so that was a lot of fun.
It was very cathartic for all involved. In the overall scheme of things, relatively pointless. So
yes, it was absolutely pointless, but it was entertaining, I guess. Didn't accomplish anything other than if I was John Mack or any of these other guys, I would say I'm never coming back here again. Greg and I talked about a lot of these things that have been taking place for us over the last 2 years now, as you correctly pointed out, when this financial mess started to appear and loom large over everything. Then all hell breaks loose, and we have a lot of programs that are being done on the fly because nobody really wants to step up in front of the train and do the things that you really need to do to get it out of the way and fix it. So it's kind of a grinding kind of a process that keeps on keeping on.
Yeah, one of the things that I find slightly hopeful, and it doesn't mean that Dow's going back to 14,000 tomorrow, far from it. One of the things that I find slightly hopeful seems to be a growing realization since this thing first started, and I look back at February and March 2007, when the first subprime lenders started going belly up, the accredited home lenders and New Century. It's already 2 years ago since those guys started turning up their toes. And since then, there's been just a massive amount of denial. There's been an expectation that things would pop back. The value of all these toxic securities would be restored because the economy would improve. People would be able to begin paying back their mortgages, blah, whatever reason, or refinancing them at lower levels. And there's just been a lot of denial, a lot of effort to cover up the real valuation of these things. My favorite story this week came out last night. Wells Fargo announced that it had added another $345 million or thereabouts to its losses last year because of credit events in January. Now, why something that happened in January affects last year's results, I haven't yet got to the bottom of. But there has just been this trough of denial, and I think we're getting to the point where there's a realization, particularly amongst the powers that be, that these things are not going to cure themselves. One of the points that Mr. Geithner made in his speech was about stress testing the banks. What they are going to look at is the fact that the banks are still carrying huge amounts of stuff on these books at prices that absolutely do not reflect the very real impairments that they've suffered. That is the sort of thing that's going to make life nervous in the financials for quite some time yet. Unless we want to be Japan, the sooner someone faces up to the reality that a lot of these things have significantly deteriorated in value, the better off we're going to be. And that's the end of my soliloquy for the day.
Well, that's the video I posted from the economist Rogoff on the BBC interview on Hard Talk, which I thought was very good. He just basically said, we're just going to have to bite the bullet and put the banks that are in serious trouble in receivership and clean it out and then step up and move forward again and get it over with, sort of like, going to the dentist and dealing with that bad tooth. You got to do it. The next thing I would talk about is the market is basically broken, and we have relationships with oil to gold and gold to the dollar and the dollar to bonds and so forth that are just really pretty out of whack. Naturally, of course, gold should rally with a weak dollar, and they shouldn't be moving up in tandem together, and because they're usually uncorrelated. Then we have oil going down, which is also sometimes linked to price of oil, and it's certainly not acting that way. And of course, bonds are rallying in the face of huge supply that needs to be done, and auction results which are very terrible. But they came to meet their maker today, finally. But there was a panic to buy bonds and created a short squeeze and squeezed us a little bit. So, any thoughts on that, Greg?
Yeah, the oil market at the moment, particularly the US oil market, is just a joke. The situation is the front month contract, which is March, bounced up about 10% today. There's been some selling pressure in that particular month over the last few days, and particularly late last week, because the USO, the oil ETF, which has expanded to about something over $3 billion. Last I looked a few months back, it was 600 or 800 million. It's just massively increased in size. They rolled over forward to the April contract last Friday or early this week. That selling pressure in the front month went away slowly, and now today, with the March options go off the board on Tuesday. So you've got a situation where the market is being driven by forces that have very little to do with where a price of oil should be valued. One of the big complicating factors there is that the storage facility at Cushing in Oklahoma, where NYMEX oil is delivered, is virtually full. The price is being driven by the fact that people can't put more oil into Cushing, and we're going to see how this plays out. But I would expect that we're in for another rough ride next week, and then we'll roll over to the April contract finally at the end of next week, I believe, and that the contango there are just huge. I don't have the numbers in front of me at the moment, but they are historic. It's a distortion.
And they're storing oil in everywhere. They're leasing container ships and putting the oil in there and letting them sit offshore somewhere, and because they don't have any place to put the oil.
Right.
It's an amazing thing.